So this was Monday. So we're looking at just going over these markets as they are, not complicating anything, okay, as they are. So you can see here, Asian session. So before 9, Asian session, you can see just very slow movement sideways, up, higher low, higher high, then a break of structure here. From this higher high down to the lower low. So how do we know that? Market went below this higher low and formed a new low, a new candle after, okay? So areas of interest are the imbalances. This one is one of them. Another area of interest is this one, okay? So like usual, let me mark this out using, so we're saying that to a higher high, then a break to a lower low. It's a golden pattern, okay? So what we want the market to come into any of these imbalances and form an engulfing candle. Yeah, either there, then goes down. Okay, so what do? Wait for, you measure your higher high to your lower low, extend that trend line. And then you just wait for the market to come, test an imbalance, and form an engulfing candle. So here it came, tested this one, then formed the engulfing candle pattern here. Okay. So it was a pretty easy sell setup. Your risk is on top there. Bounced off 38 level, so target is -27. That was the only setup I saw on Monday that quote unquote made sense. Okay, when I say made sense, means had some very clean setup. Okay, but what we can see is even in New York, we had lower high. So compared to this lower high, lower low, lower high, low, higher high. But now this is all sideways. Like there's no particular, it's not breaking any high, not breaking any low. And then it formed this high here, low, high, low, then pushed up to a higher high. Once it pushed up to a higher high, it came down into this imbalance. So we can see as it was pushing up above this structure point, bullish candle, new bullish candle formed. So you can see the market started going up, okay? And then once it formed resistance by forming this bearish candle, there's an imbalance here. And no other imbalance after that. The only other thing we find is an area of support all around this place. It's touching, bouncing, touching, bouncing, touching, bouncing. Okay. So if you use your fib, now for someone who trades just support and resistance, this was almost easy, but pretty uncomfortable. Okay. By uncomfortable, I mean, so you're waiting for an engulfing candle here, it doesn't form, goes up, comes down, and particularly breaks structure, breaks this low, forms a lower low, then pushes up to the high, higher low, high, then pushes down. So this is all consolidation. But you notice that the market was not breaking this support here. Then it pushed bullish, okay? So it was an uncomfortable buy because someone could have bought off this engulfing candle pattern at the support here. But again, it's such a difficult trade because the market has quote unquote broken structure already here. So now you can't be buying off that zone. So for me, no trade. Remember, if it's not clear, don't trade it. Okay, if it's not clear, don't trade it. Then on Tuesday, we had CPI news that spiked the market bullish. So even then, there was a setup there. So the market went up, came back down into this imbalance, pushed up, came back down again. The same imbalance formed an engulfing candle pattern here. And then from there is where it went all the way to, but did not get to the top, the take profit zone. Did not. I was in this trade, but I lost because my entry was there, stop was there, my target was there. It missed my target by half a pip, and it was a disaster after that. Yeah. There was no clear setups after that for me, especially during the London session. It just pushed down, came back, engulfing at the low, went one candle, came back up. A sideways movement to me, or haphazard movement. It's not a market that I would trade. And then did the same thing during news at 3:30. Spike up, left an imbalance there, in another one here. So I waited for the market to come into this imbalance and then form our engulfing candle pattern so that we can buy. It didn't, just continued going up all the way to the close of our session. Now this has now been the order of the day. So it does this, then continues, you can see how much was missed. So there's still an opportunity to learn what more we can do when the market behaves like this. Okay. If you're trading the 15-minute, maybe, but the engulfing candle closed at the high. But like I mentioned, I'm only going to go over the market on the 5-minute. Okay. Just because it's a short webinar. On Wednesday, and this is what I expect you to be doing when you say you're doing your post-market analysis, PMA. So when you're doing your PMA, when I say do your PMAs or do your post-market analysis or do your back testing, is go to the week, go back to the market and see what opportunities were there that I missed. Okay, what opportunities were there in the market that I missed to see, or I missed to take advantage of, and how can I take advantage of them the next time they happen. Okay. So here we had a very crazy news day. So this was CPI also, the pound CPI. And once this happened, then we had sort of no trade day, because the imbalance here is huge. This is an imbalance. The only setup that we saw was when the market formed this engulfing. But if you look at it, it formed a lower high, a low, then it broke above this zone, formed a new high here, then higher low, higher high. So you can't be selling at a higher high. You have to wait for the break of structure. So it broke, then did not form an engulfing candle pattern to sell. Yeah, it continued again going up. So we could say there was an area of interest, but the engulfing candle didn't form. So no trade on Wednesday of last week. Played around almost all day. So it played around between this high and this low. Played around almost all day. There was no particular directional market movement. Remember we talked about that you'd want to get into the market when it has clean moves. Okay, clean breaks. Either it's going bullish, it shows you a nice bullish structure, or goes bearish, shows you a nice bearish structure. Thursday, fairly the same thing. Higher high, higher low, higher high. Came back, formed this engulfing candle at 9:30. So remember, we start looking to enter at 10. Okay, so exactly after that 9:30 and 35 candle, took it out, went down, did not form a clean break per se, then came down, just haphazard movement. On the 1 minute, very nice movement. On the 3 minute, very nice movement. But for the 5 minute, not much. And remember, you're trying to reduce jumping timeframes so that you don't get lost in the analysis. Okay, and here we had a clean break back into the imbalance here. back into the imbalance. And then it formed a doji and a bearish engulfing candle. But because this is a doji, we ignore it. So this was the only other setup that had a really bad risk to reward. It formed at the 23 level. I've talked about this a couple of times. Once the setup is formed on the 23 level, you'd rather avoid it because this is what usually happens. Gets to zero, maybe plays around, then changes direction. Okay. So no clean setup on Thursday. And then Thursday afternoon, we had PPI. That was the one, PPI. That spiked all the way bearish. And after that, the market just came back up the whole day, the whole of the New York session. You can notice here, the market broke above this high. So I waited for the market to come here and form an engulfing candle pattern. It was already past our time. Didn't even touch it, and it continued going up. Okay, so that was Thursday, and then we come to Friday. Okay, I hope I'm not too fast. We come to Friday. Friday, this is what we are seeing. Bullish market. So higher high, lower low, then lower high, higher low, higher high, higher low, higher high. And then during this, when it is in this higher high, there's a structure point it forms here. We talked about structure points. I hope you guys can remember. So this is basically a higher low on the lower time frame. But here you can see a nice long wick. Okay. So sideways movement, then drop down by around 950. We are now sort of in a bearish market, but not a clean one because of this doji. The market came back into this imbalance. And it formed an engulfing candle pattern above, from above, like it broke above the imbalance, then came back in. Okay. So this in itself was not an engulfing candle pattern, actually, because the wick was not long enough to cover this one. So if I open my indicator, the engulfing, Addison engulfing indicator, you notice that this candle was not indicated. It's not an engulfing, but the market still went down, which is fine. It happens. And came back up, didn't form a lower high. We were expecting a lower high here. You can notice that we're looking to see whether it will, one, break below. Didn't, then came back and changed direction. So once it changed direction, formed a higher high, came back down and formed an engulfing candle off this imbalance that closed at the top. Yeah. So there to there. 23 level. So of course, when you see a 23 level engulfing candle, then that's not an opportunity for us, but it still went up. Okay. And that is what has been annoying between last week and this week, because it's doing something like this and continues to go up. But rules are rules. And remember, we trade with rules. Okay. New York was sideways, higher high, then played around, didn't give us any opportunities as it was going up. It's just sideways movement, sideways movement, sideways movement. So remember, just want clean setups. All this looks haphazard, and that's why you notice the market is not doing sensible movement. And then that was it. Then came all the way down into the same imbalance it had formed during London session, then spiked up. So for someone who was trading this on the 1 hour, I think this was a setup, or the 30-minute. This was a setup here. Okay. And then now we are back to yesterday. Now, John took this buy. I also took the same buy. I took this buy of this imbalance on this candle at 10.10. So what are we seeing? Same concept. Higher high, higher low, high, lower low, lower high, low, high, low. So all this, when I say high and low, it's just that it's not breaking above this zone. Remember your tests and your breaks. Okay, so it's not breaking above that black line. It's not breaking below this black line. So it's just up, down, that's sideways movement. Then it pushed up to form a new higher high, then came back down. This was at 9:35 again, 9:40, formed an engulfing candle. Not our time yet to enter the market. So again, played around, came back into the same imbalance, then formed this engulfing candle at 10:10. So now that was the opportunity to have entered. Okay, that was the opportunity to have entered. This was now the buy. The stop loss was below here. There's a lesson I taught last week. Not a lesson, but I mentioned this in a webinar. I don't know how many people were in that webinar. Now, this I think is one of the most annoying setups I have been in for a while, because this is what you call manipulation. So it gives you an area, gives you a confirmation, and then first takes you out, then goes your way. Okay. They happen, though they are rare, but they happen. So the assignment is go and break this engulfing candle pattern down. This is yesterday's setup. Go and break that engulfing candle pattern down to the 1 minute. Okay, we talked about this. So if you go to the 1 minute, you're supposed to see a break of structure, something that looks like that. Okay. And once you see that break of structure on the 1 minute, you know, people always place their stop losses haphazardly, and I noticed that. Your stop loss should be at the 120 level of that engulfing candle pattern. You remember we drew fibs. We talked about these levels here, 100, 110, 120. So the 120 level is where if the market hits that, then you expect that the market is changing direction. Okay, we talked about that. If you go to your videos of Fibonacci, you will see it. So if you measure and you look at this, break this down first to see whether it was a break of structure on the 1 minute, and then you use your fib to measure where your stop loss would be, and the stop loss was just below here. That was the stop loss. It was just below here. So
Adam,
this one
sorry to
didn't
interrupt you, but
pardon?
could you please, sorry to interrupt you, could you please explain how come that level there becomes the 120? Because from this fib that you've drawn, the 120 is way down there.
Okay, this fib is for the 5 minute setup. So this low to this line high, right? So
yeah.
but our engulfing candle, remember I taught you guys the engulfing candle, and I broke it down. The engulfing candle is actually a break of structure on a lower time frame. You remember that
That's
lesson?
correct, yes.
Okay, so
Yes.
if I go down to the 1 minute, let me just go down there. I wanted to give you that as an assignment. I wanted you to have an moment, but you do not want the moment. It's okay.
Yeah.
So for me, I had already marked out this on this movement, but now this is the movement that I'm talking about. Okay, here it's not very clear. I do not know why. There's on if you look at this on Think Market, no, not Think Market. Which broker is this? This candle was bullish. I don't know why, but it's fine. So you can notice that this is now the 1 minute. So you can notice that there is movement here, lower low, lower high, lower low, lower high, lower low. Then there's like a structure point here that, again, this is very interesting. I had not seen it on or under. So this candle does not touch this line. You remember when you talked about clean breaks? Let me
Yes,
see. Let me
yes,
see whether I can
yes.
see that. I think it is on FTMO, not FTMO, on
Trade locker.
not on trade locker, only on
Yeah.
FXTM.
Yeah.
Yeah, FXTM.
Um,
1 minute. Go down to, this was Monday. Let me find that. I'll find that right now.
okay.
Oh, I think it was on trade locker. Fine. Anyway, is well. As FXTM now it has resurfaced that setup as a the candle is actually like the break was not broken. The break was not broken. Okay. So this engulfing candle pattern should be a break of structure. Okay. So, but what we see here is bullish, 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 but did not form a new bullish candle above this swing point or structure point here. So what we have is a no trade day. Okay, or rather a no trade setup. This engulfing candle says it's not time to enter yet. Okay. And in that light, you're taken out. But if you're to measure this from this low to this higher high, that's what I'm saying when I say the 120. So even on the 1 minute, you can still use a fib to measure the movement. Okay, so you can see this low to this higher high. Okay, but it's not a clean break, but you can see this low to this higher high. If you measure that, then you wait for that retracement, because now this shows that the market is now in a bullish move. And you wait for that retracement. It does not hit the 120, which was there. Okay, so going back to the 5, let me go back to the 5. I'll show you the same setup, but for today's trade.
Okay. All right, understood.
So if you go back here, you'll notice that the market did not come all the way down to the 120 here. But everyone, including myself, I put my stop loss here, just below here. It took me out and went my way. I had no patience to open the 1 minute. Yeah, cost me, because I was very sure, because of all this movement. And notice this all this bullish movement, that we really were going bullish and going bullish impulsively. So that took me out, annoyingly so. Okay, but that was the setup. Okay, when you break it down, you realize it was actually a no trade day, because this candle didn't really break structure. It was just a bullish move, but it had not broken yet. Okay. So after that, then you wait for New York session. Again, no clear structure movement. Yeah. And no clear lower highs or higher lows with engulfing candle patterns. Because even this one, as you can see, this engulfing candle pattern here, even this one was between the market not breaking this low. Okay. Remember this, I mentioned, and I want to mention it again. Enter once the market has had a clean break, then wait for that imbalance to continue. If it does this and you want to enter, it has found support here, and then you want to enter in an imbalance between a lower high and a low, it can easily come back here and then change direction and go bullish, which is what it did here. So you want a bearish candle that closes below that lowest point of the lower low, the previous lower low, like a new bearish candle here. Okay. which is an example that I will show you. We have 6 minutes. An example that I'll show you for today. So today you can see, let's read this structure nicely. The market came from this high, I'm just looking at a simple place of structure, down to the lower low, lower high, low, played around, because this is just movement, sideways movement, bearish, bullish, bearish, bullish, bearish, bullish, just sideways movement. Then formed a lower low down here, then broke up to a higher high. So once it pushed up to a higher high, came back into this imbalance. Okay. Came back to that imbalance. Then pushed up, sideways movement, bearish, bullish, bearish, bullish. Then a push bullish here, an engulfing candle pattern bullish here. And this one, if you notice a yellow box, know that it was broken down. This bullish engulfing candle pattern, if you go to the 1 minute again, just to see, was that engulfing candle really a break of structure, or was it just a normal sort of bullish move? So if you go down to the lower time frame, you'll notice that this is a lower low, a lower high, sideways movement, yeah, up to here. Then a push above, didn't break, so this is a high, a low, same zone, then a break to a higher high. So now it's a bullish move. So when you see this engulfing candle being a break of structure, by break of structure, it means it's a bullish candle, bullish, and a new bullish candle here that formed that was above this structure point here, that line. It's confirmation that the market is strongly bullish. Okay. The reason I put my stop loss there, so you can see there to there, extend to the left, stop loss at the 120 of this small setup, of this break of structure. Okay. Which means if it takes my stop loss, it means it has now changed direction, is back to a bearish move. Okay. That's why you put the stop loss below the engulfing candle pattern. But it needs to symbolize something. So if I go back to the 5 minute, you'll notice that my stop loss was just below the lowest wick of the engulfing candle pattern. Let me remove this so that you can see it. So engulfing candle pattern is this candle and this candle, bearish, bullish. Look at where the stop loss is, just below this wick. Okay, but in real sense, it's at the 120 level. Okay. I wish I can stress that enough, but I don't want you to watch these videos again and again so that that sinks, right? So the entry for here, you can see the entry is more refined because I was looking at how do I better that entry. Okay, so it's at the imbalance of this break of structure on the engulfing. But that's, again, going back to nitty-gritties. But the point is, even if it closes and you enter there, and you're risking this, and you make 2R, you're good. Okay, so notice the market has bounced off the 50 level. So target is 0 level or negative 27. Okay, so now the market has started to go back to its normal market movement, especially during the London session. Okay. Then after that, I don't think we had another setup in New York. It was just moving without particular higher lows that we could take advantage of until maybe this one, which was just testing this low inside this imbalance, but it was already outside of our trading window. 2 to 5. Those 3 hours. It was outside our trading window. Okay. So I've tried my best to just go over setups that have been there. Apart from this one, should be, you can notice that not every day is a trading day, especially during this season. It's a very tough season to be trading. And this one, yeah, almost getting to your take profit, then reversing. 2 losses and 1, two losses, two wins. If you are losing 1% per trade and earning, risking 1 to make whatever, even whether it is 2 or 3, then you'd be up maybe 2% for the last 1 week, because we are in a very tough season. Okay. July, August, usually a tough season. All right. So that's it for this small webinar. For Thursday, we'll do question and answer. Okay, question and answer. So time is up. This will automatically close. I'll upload this video, go over it again, learn from it.
There's just one question from just one. Hata si swali.
Haya, ije itajizima, sawa.
Au tufanye hivi
Eh,
juu for the past tuseme a month nimekuwa ni trade higher time frames like 1 hour na kuendelea. Now for the last time hii London session na New York session inaanza saa ngapi inaisha saa ngapi?
Haya, sawa. Wacha nikujibie kwa text.
Sawa sawa.
Okay.